Welcome back to the channel. Happy Sunday. Who doesn't know? I am Damani. I do trade in the stock market each and every day, and I break stocks down and I show you guys what's going on in the market. My main reason why I created this channel is to help young investors to put their money to work. So let's get right into it. So this week, not a lot is to come, not a lot where earnings are expected. So this week the market is going to look forward nothing other than Walmart, Home Depot, and Alibaba. Who doesn't shop on Alibaba over in this world? But before we go so and get on into everything, the breakdown of stocks and reports that what that is expected this week, I want you guys to head on over and subscribe to the channel. All right. And please, again, like and subscribe and share the channel so we can grow this channel together. So, I want to bring to you Walmart, Home Depot, and Alibaba is set to report this week. NASDAQ this week has climbed just 1%, but our strongest fear in the market, one of our main contributor, while the market continues to trade sideways. And from my perspective, I think we're going to continue trading sideways for a while because 10-year treasury yield still shows at a high point. So this is overnight Sunday night training, and 10-year treasury yield is still up. Look at that, 4.49%. So we are not trading lower on the 10-year treasury yield. And when 10-year treasury yield continues to stay persistently high, the market tends to go lower. So this is one of our main contributing factors why the market continues to trade in sideways. So let's go over and break down what is expected this week. But before we go into the stock breakdown, I want to bring to your attention what is expected this week in terms of report and where the consumer market is going. So for last week, inflation, some of the inflation news came out and it shows that consumer spending is not going anywhere. Therefore, inflation is going to stay with us a longer for a while. And when this happens, Jerome Powell tends to keep market on the downside. Not that he wants to, but unfortunately, when the economy show no signs of progression, then you have to go up on increasing rates, and that's not something that we want right now. We're expecting 3 cuts this year. Let's see if we do get any of those. But if the new treasury yield continues to stay high, if market continues to do bad, where the economic market continues to show where initial claim is continues to be not so good, and the consumer sentiment is not going anywhere, guys, then of course Jerome Powell have no other choice but to force his hand to increase rate or to keep rate higher for longer. So as we have seen on Friday, where the market took a like 100 points pullback, which is Nasdaq, because of the consumer sentiment came in higher than expected, and initial claim wasn't so bad. But for this week, we have not so much of a report coming out. I will keep you guys updated where that is concerned. But for now, the future is down. Why? Because again, Friday consumer sentiment spending was higher than expected, came in more than expected, so therefore the market took a turn. While the S&P 500, I think, seven or 6 day straight gain, which is good, but Nasdaq did not take it so well. So now we're looking to see what happened this week. And the stock reaction to economic data, as you can see, we're still trading just slightly above, and we corrected ourselves and we're coming back down to flat baseline. If we do go below this, then then we're looking not so good. But other than that, there's a lot of report that's coming out this week. Not much of earnings that we pay attention to, but Alibaba is one of the main one. Home Depot, and nothing but Walmart. So let's go ahead and dive into what is expected. I think on Thursday Walmart will be reporting. Yep, on Thursday Walmart will be reporting, And then Tuesday, we're looking to get some information from Home Depot. Monday, Tuesday. Yep, Tuesday, Alibaba and Home Depot will be reported. So we're going to go ahead and break those stock down and see where we stand so we can set up ourselves for this week to earn some money and not to be a bag holder of any stock whatsoever. On Friday, economic data leading index April, what is expected 0.2% comparing to previous, which is negative 0.3%. So, but I will be keeping you guys posted where news is concerned in the market and how we go about what to expect and how can we break this down. But let's get on over to some stock breakdown. So my take from this is I love Walmart. I shop at Walmart like every 2 weeks. I go to this store to shop, and their stock has been doing tremendously well. And I'm not sure why I'm not in it. But this week I will definitely see how it trades, and then where I'm going to get in and where I'm looking to get out. But they have been doing tremendously well over the past couple of years, I can say. But I don't own the stock, and so far the company is looking good. So let's break it down. All right, so if you had bought Walmart from in December, Lord, you would be up so much money right now. You'll be up over 22%. That's tremendous. If you had bought Walmart from $49.80. So Walmart is trading sideways now because of earnings that's coming out, and we tend to find a support right close to the 180-day moving average, as you can see. So sideways, sideways. Again, there is 3 stages of reversal. Stock keep pushing up, got rejected. When we get rejected, then the stock sold off. Once the stock sold off and then it started going sideways, then we're forming what is called consolidation. This is when the stock consolidates. So there's 2 ways the stock can go from here now. It's either upward from earnings or downward from bad earnings. So if the guidance is not good, of course the stock is going to take a dip. The earnings, they can beat earnings by how much dollars, how much cents they want to beat it by. But if the guidance for the company is not good, if they're not telling Wall Street what is expected for the future for the company, then therefore we can see a dip. It happened to let's see, it happened to Netflix. Netflix had smashed earnings tremendously, but their guidance wasn't good. So Netflix was trading at $639. They they broke support where I drew support, and as you can see, they beat earnings by $5.28, and therefore the guidance, they said, "Hey Wall Street, I'm not going to share with you no longer my subscribers." And look what happened. The stock took a dip, but fortunately, Netflix recovered somewhat. They recovered from their previous lows. They recovered 14%. This is sweet, nice, but as you can see, they got rejected at 624. So they're coming. It's either they're going to continue to go sideways, depends on how Nasdaq is trading, and then the stock will continue to go back where it previously sold off or make new lows. Again, so let's take it back to Walmart. So there's 3 stages of reversal: um, rejection, consolidation. Once the stock going sideways, consolidated, and then upward trend again. And it's once you see a stock forming a W shape, therefore it's on the upward movement again. So Walmart, I would look to see if Nasdaq continues to sell off this week, continues to make new lows, then I will look to get into Walmart at $58. I'm pretty sure Walmart is going to beat earnings, but if their guidance is not good for the future, then the stock will take a dive. And also Walmart do pay earnings, so this is a good stock you want to buy and hold for the long term. So this is a great company. A lot of Walmart is going to be around for decades. We all know that it has been around for decades. And for the last 3 years, the stock has been doing good. Let's look at it for the last 5 years. Stock has been doing good for the last 5 years, guys. So you can see sold off, found support, and continues to rise. And now it's doing the same thing, consolidating. And I'm pretty sure they're going to beat earnings. It has been beating earnings. See? It has been beating earnings numerous times. Let's go over and see how Walmart has been doing for the last couple of years with earnings. WMT, Tinker symbol, where earnings is concerned. Let's see. Yep, they have beat. So beat earnings, beat met, beat last time they have earnings, which was the Q um the first quarter and the second quarter, which is Tuesday. I think Tuesday they're gonna beat earnings again, guys. I don't see Walmart missing out on earnings this time around. The stock has been doing tremendously well. So let's go over to Home Depot or Alibaba to see what is expected from their stock this week. And some of the, so that is one of my main pick stock for this week to trade. Let's go over to Home Depot and see what they're doing. Home Depot was one of my go-to stock for this year, earlier in January and December HD, because we all know once once the 10-year treasury yield start coming back down, and once the government decide that they're not going to increase any interest rate and they're going to start cutting, a lot of people is going to start taking out loans, and what they're going to do improvement in their house. So where the money is going to go? In Home Depot. So looking at Home Depot, the company hasn't been doing so well for the last couple of years. To be precise, for the last 3 years, the company has not been doing so well. As you can see, pushed up, got rejected, sold off, found support at 326, and then pushed up, and they're testing our moving exponential line to see if we go above $353 a share. If not, it's going to continue to sell off, but they have been beating earnings. So again, earnings is expected on the 14th. So Home Depot will be reporting. Not somewhere that I will put my money now. I don't think they're going to report a good earnings, because therefore we have higher inflation still lingering around. We have higher interest rates still lingering around. Therefore, once higher interest rate is here, you have less leverage over borrowing from the bank. Central banks still have interest rate high at 7.9 point. They're still holding up a lot of interest rate high. So Home Depot, I don't think this is a buy this week. I think this is a short. So when they're reporting, to be on the safe side, wait for confirmation before. But for all my pro investors who do watch my channel, this is a nice short right here. I will definitely short Home Depot, because I don't see them beating earnings. Of course, they can surprise us with beating earnings, but with all the contributing factors leading towards this report, I don't see Home Depot beating earnings. So let's see if previous earnings they beat. So let's go HD, HD, and the stock hasn't been trading so well either. They have been beating earnings, so chances are they might beat again, but I don't see it happening in the second quarter, because there's too much going on. But who knows? Tesla didn't beat earnings, but their stock went up 15, 16, 18%. So there's so much you can expect from this market these days. It's crazy. Last week, a lot of company did not report great earnings, and their stock still soared to the market. That's something that's unbelievable, and I just can't see through it. But who knows? But on the other side, let's look at some of my main traders. What is to expect this week, and what I am doing, and how I plan to trade the market. So this is supercomputer, super micro. I've been getting has been getting rejected at 856. tend to bottom trade at 698 and pushed up for some small gains. But as you can see, the stock has been getting rejected. Therefore, this is a great short for me for this week. But stock that I will look into buy and hold for a while is nothing other than Meta. If you had got into Meta at $414, you should be up some nice penny right now. It's a great stock to hold. Wayfair has been doing tremendously well, but as you can see, got rejected and sold off or beat earnings by negative 0.32. Pushed up, got rejected, coming back down. I will be shorting that Wayfair. Why I will be shorting Wayfair? Because I know. Look what happened previously. Pushed up, got rejected, sold off, consolidate for a while. Pushed up, got rejected, sold off, consolidate for a while. Pushed up, got rejected. Again, pattern is to use as a great reference to what you're going to do with a stock. Not all the time they work out in our favor as investor, but I will be hoping in a short and Wayfair. Why? Because the contributing factors are right here in front of me. These are the logic stored. These are my chart is telling me, hey, it did this before. Chances are it's going to do a 99.99% chances it's going to do it again. Pushed up and the overhyped got rejected. Now it's going to come right back down to consolidation around either $48, or if not, we can look for a consolidation around $47. So this is where I will open a short and Wayfair, and I will hold it for a while and see what it does. So again, guys, please like and subscribe to the channel because I do break stocks down on a daily basis, and I do inform you guys what I'm doing for the week. So again, quick recap. So for this week, not much to expect, but we're keeping a strong and a close eye and consumer spending update for this week, because once we get that report on Friday to come, we're going to see is either uptrend in the market or a downtrend in the market. And to be on the safe side, guys, where we're not holding any stock for a while, or we're not down in the market and say, oh, the stock market is against us. Nothing is against us. We have to pay attention to the chart, the news, what's going on in the market. So again, CPI report will be coming out this week, Wednesday. I will be sharing updates throughout the week leading up to Wednesday in regards to the CPI report. So we'll on Wednesday, investor will be getting their first look at whether the trend continues into the second quarter with the release of the April Consumer Price Index, which is the CPI. Wall Street is expected an annual gain of 3.4%. So again, if we don't see 3.4% in the CPI data, we will be getting a turnaround in the market. What do I mean by a turnaround in the market? Let's break it down, guys. Let's go over to NASDAQ. This is NASDAQ. NASDAQ, if CPI data come out and it's not what is expected, which is over 3.5%, then we're going to see a pullback in the market like we did previously. And if it beats or it stays steady, the market tends to go sideways or we're going upwards. Because what does this mean? It's telling Jerome Powell, which is the leader of the Federal Reserve, the chairman of the Federal Reserve of the United States of America, saying, hey, consumer price is looking good, therefore, all right, I can start cutting. And remember, one thing you have to pay attention to this year is nothing other than the election here. So Jerome Powell wants to start cutting rate. He wants to, but if he doesn't use the sufficient tools that he have, therefore it can bring a disaster to the economy. So again, and again, guys, Wednesday, we're looking for a 3.4% lead in CPI data, a decrease from 3.5 headline. This is the headline number in March. So we want this number here to go down, not up. So if we go to 3.5, we're in trouble. 3.4 or lower is expected. So again, guys, please be careful of your entry in the market. Please be aware of your position size, because these are the things that hurt us the most. All right. So if you need anything, please feel free. I do make shorts. You can message me there, or please feel free to message me on YouTube. All right. I'm here for you guys. Until then, stay peace, stay calm, and wait for your entries. Be careful of the position you make in the stock market. But before I go, like, subscribe, and share this channel. Have a great week.